G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's Friday the 9th of November 2018. I'm in Darwin in a hotel room, and I'm a couple of hours behind, or an hour and a half behind Sydney and Melbourne time. So it took me a little bit to get up to speed this morning. But the key thing from my point of view is that there are two key stories. I know I said key twice then, but two key stories that come out of last night's move. The first is about the FOMC and the market's reaction to what was pretty much a business as usual statement. They noted, I should say, that consumers remain strong, but they also noted that business investments come off the boil. They did not note recent market ructions, and that seems to have got people focused on the fact that the Fed is actually hawkish. Why that kind of revelation needs to be made, or I don't really know. I didn't really expect much else from the Fed last night, and I didn't really expect much of a reaction, but we did get one. And it just tells you about the thinness of markets and the fact that with this US dollar, and I know this is a recurrent theme of mine, but with this US dollar, positive catalysts help it, but when there's a lack of catalysts, it drifts. It needs to get up and through 97 in DXY terms. It needs to get down and through 112.80 in Euro terms to really surge and kick to the next level. Now, last night's reaction suggests that might be the case, but if stocks stall, which was the other part, then perhaps it won't. Anyway, the S&P ended down 0.25% at 28.06. It looks to me like it could go to 27.34. The Dow was basically flat. The Nasdaq was down 0.6%. Europe was mixed. FTSE up, DAX, CAC, and FTSE MIB down. The Aussie market down a little bit. Gold's down a few bucks. Silver got absolutely belted over 1%, 1.1, 1.2. Copper lost 0.7, 0.8. Iron ore's down. Oil got Polex, which is the other big story. The other big story is the continuation. There's those three things that are driving oil at the moment, aren't there? There is the Saudis, the Russians, the Americans, all pumping. And that's got people concerned. The Iran waivers mean that all that pumping may not be necessary. And then, of course, we've got concerns about a demand, right? So that has continued to put pressure, and we've got oil now into those target zones that I identified after the break of 74 and 64, and now we heard this morning that a Saudi think tank is looking at a post-OPEC world. Now, if you remember the last time the Saudis stopped playing nice with everyone else, oil went under 30 bucks. Now, I know that's an oversimplification, but that's going to have people worried. We'll talk about that. Anyway, let's dive in. I'll start with stocks today because that's the first part of the story. So stocks dropped a tiny bit after the Fed. The US dollar caught a bid. Oil still falling. They're probably the themes we're going to talk about. So here we are at the S&P 500. 28.23 was a number that I highlighted yesterday, was the key that it had to get through. It couldn't. It couldn't even get through this 61.8, and it's had an inside day. So it doesn't tell us anything other than the previous day was huge. If it can close the end of the week above 28.23 stocks, then it can roar. It can roar back towards new highs. If, on the other hand, it reverses and heads back towards 27.30 or thereabouts, then that will tell us that a lot about the market. So if I just do this, you can see just there the 60. I'm pointing at the screen. You can't see me pointing. 23.34. Is this the 38.2% retracement? I'm just going to get rid of that. Right, so it's also the 38.2% retracement of this big move. So there is support there on the broader move. And then it's Fibbo also on this up move. So 27.34 is going to be really important. Keep an eye on that. At the moment, you can't take too much away. The only thing I'd say is where's the volume for this rally? That's a question worth asking. I have a look at the Nasdaq now. Same story. Can't get through. It didn't actually make it back to its 61.8. The MACD. Remember what I say. Sometimes the first signal you get is wrong. It's been really good up to now. If it falls back down, probably through 7057, which is 100 points from where it is, then you'd say you're going to see the MACD expanding again. We'll go back towards and test the lows. You could also obviously have a little upside trend line there, which you can use which I would use as a first sort of port of call. In terms of the local market here in Australia, we've stalled here. Head sort of shoulder maybe big shoulder, head, shoulder maybe. Looked like it broke yesterday. You wouldn't, if I draw that trend line in, I wouldn't want to see it back below that trend line. So basically, you don't want to see it back below Wednesday's low, which was 5815. We're at 5900. That's a long way away. I wouldn't expect a collapse today, but you might see some nervousness. All it takes in nervous times is a lack of buyers for prices to fall, so keep an eye on that. The DAX. Is the DAX leading or is the DAX just moribund? Last night, the IMF downgraded European growth again. It's a real reflection, and 2018 growth, not just 1920, but 2018 growth as well. It's a real reflection of the problems that Europe has right here and right now. And the DAX, in many ways, is feeling that. Also, there's some chat about Brexit and fishing rights and those kind of things, which could make things intractable. If I look at currency markets now, looking at the euro, I had that old trend line in. It's now back below it. I'm going to get rid of that, obviously. Right, so what did it do? It failed at the 38.2% retracement. That, for me, remember I always talk about the easy garden variety move. If a market fails at the 38.2, then that means the previous trend is still intact. So, and quite honestly, you can always get moves back to the 61.8 and the previous move can still be intact. But for the moment, what have we got? It needs to close above 115 to kick higher. It needs to stay above 113 to kick, not to kick lower. Obviously, a break below 112.80, which is the number I've talked about for a long time now. But a break below 112.80 on the dailies opens up 108 figure 20. On the 4 hours, and you can see that in markets morning this morning. On the 4 hours, a break of 113 opens 110. So that's the number. 113 is the number. 97 in DXY terms. A weekly close above that, a weekly close below this. I've got to be honest with you. The technical rejection of 115 was very important, but I didn't actually think we'd be back at 113.65 today. So I've got to respect that price action. I'm also going to respect 112.80 to 113, but if we close below it, it starts to look really, really powerful for a dollar move and really, really ugly for euro. Now here, of course, we've got dollar yen breaking higher. 114.55 is the high recently. 75 is the top of that range. Remember that blue zone that I had in the video a couple of weeks back. Obviously, if stocks go off, a dollar yen will come down. It did that briefly this morning before recovering, but we're just going to have to keep an eye on that. It's overdone in a stochastic point of view, but RSI not so. But my sense is we get a test. Whether we get a break is another story. The US dollar is setting up for a powerful move. I haven't got a chart for you. I think I can. It's going to get a bit ugly here for a sec, folks, so just please bear with me. If it opens. Sorry, I'm just trying to open. Let's just keep going, and yeah, there it goes. All right. Sorry about this. I know this is all really big. I'm running everything off my machine here. There we go, US 10s. All right. It'll come up now, hopefully. There we go. Here it comes. Right. So 3.25 is the top of the range. Now, if you get a week close above that, a weekly close above that, then that seriously opens the top side. Now, I should, in all fairness, be drawing it from here to there with that as the move and then the projection. The projection is about 15 to 20 points. So that gives you 40, 45 as your target. If we got 10s at 340, that fundamentally changes the whole game. Stocks are in trouble. The US dollar's got a bid, those kind of things. So continue to watch. It hasn't broken yet, but a weekly close above 3.25 would be a bullish sign. If I have a look at sterling, sterling's broken back and a fractal. So that's now the level that sterling's got to get through to kick on. You can see that the stochastics have rolled over to 131.74 is the level. Now, in markets morning this morning, I've talked about the 16 markets that I quickly look at on 4 hours as a guide to what's going to go on. I'll throw that in as part of the paid subscription when we get to it. But you could see yesterday afternoon on the 4 hours that there was some tenuousness about the Aussie, about the sterling, and about the euro. Aussie yen held on the 4 hours above a break level, above a trend line. Dollar yen on the 4 hours held above a little wedge that had broken higher and found its support on that after the Fed this morning. So the 4 hour charts for me, I'm not a day trader anymore. You know, I was damn good at it when I was a young fella, but I'm not that. You know, I couldn't come to Darwin and be presenting today if I was a day trader. I use exactly the same process though, but I don't go down below 4 hours just because it's a whole different kind of trading. So keep an eye on the 4 hours. But my system works on the ones as well. But have a look at that and you'll see what I mean. It's in Markets Morning. In terms of the battler, where is the battler? There it is. So we've got a stall now. We've now got a level to push against. If you're bearish Aussie and you don't think that it is actually going to run to the 74.40 where it might, then these two highs are decent levels to push against. 72.99 and 73.01. So, give it 10 points or so. We know 73.14 was that FOMC high back the previous meeting, so 6 weeks ago, right? So this is really interesting, isn't it? We've made another high on an FOMC day. 73.14 last time, 73.01.02. This is the bid, obviously, so depending on who your broker is. And I'm going to have a great deal to offer subscribers when I launch the paid website. Anyway, so you've got the same sort of thing. So if you bearish the Aussie, then and you think it's going to go lower, well then there's a decent level to push against. We've got there now. As it stands, the dailies have now pushed deeply into, well, not deeply, but into positive territory on the MACD level. We've had that crossover of the 15 and 30, but the stochastics are overdone. I could easily see a pullback, 71.80 now. And then we'll see how it goes. So we're about where we are now at 72.60, 40, 50 points up, 80 points down. So kind of mid-range at the moment. RBA statement on monetary policy is out today. Dollar CAD held up actually really quite well, considering there are some NAFTA shenanigans and arguments going on. Apparently the text of the deal is being argued. Ottawa doesn't think that it's going to be a big deal, but we'll see what the Americans say. But dollar CAD's also higher because oil is continuing to collapse, and the relationship between oil and the CAD is really quite strong. Dollar CAD. A close above 130.170 would be a really big weekly move for dollar CAD. If it doesn't, then we just continue to kind of this topping, what could be a topping pattern between 130.20 and 131.70. In terms of the Kiwi, it suffered most last night. Again, like the Aussie, if you're bearish Kiwi, look at the stochastics have rolled. We've got a clear fractal to push against. We entered our high. Let me just click on that. Or I'll click on the fractal. That'll tell me where the high was. 68.18. Now remember, 68 to 68.5, that level I talked about, that's been the resistance support level for a while now. And we saw that again last night. Look, you got bottom, top, and it's done it again. So if you're bearish Kiwi, you know where to push up against. And that's if you're bearish Kiwi, that's the levels. So something to keep an eye on. I'm going to talk about the Chinese yuan for a minute. The Chinese are trying to play nice, but also be quite aggressive. So we've got to keep an eye on. They're trying to say that they want to do a deal at the G20, but we'll see how the Americans go with that. Still in a range. If it broke down through on the weekly charts, it looks like it should go lower, but if it breaks down through, say, 684 or 685, then we're going to 660 or 669 at least. For the moment, though, it's in a sort of a 15-point range. Moving on to commodities now. Gold rolling over still. Does look to me like it's going to tend lower. 112, maybe 1200, maybe 1205, something like that. If stocks go off it, then, of course, gold will fall, but we'll keep an eye on that. Silver got belted last night. It's in this range, as I said yesterday. I apologise for screwing up yesterday. I was thinking of copper when I was talking about silver. But you can see continue to roll over, but within a big range. So nice range to play against there if that's your bag. Copper basically going nowhere. in the middle of this wedge right here at 273, 286 on the top side, 264, 265 on the bottom side. So not really going anywhere, but a key asset to watch if you trade Aussie and other risk assets. If copper starts to rally, you'll know something is afoot. That's the weekly WTI chart, right? Just to give you context. So 59.76 is the target that I've been talking about for a while, and 58 is the channel. Now, it's only really a two-touch channel. Two touches on the bottom, two touches on the top. We broke that inner channel there, so 58 to 59. As I said, what's the best way to put this? If this little trend line breaks, then I'd say, well, heck, something's changed. There's been a short covering rally, all that kind of stuff, and it could go a little bit further. But you can see there's a clear downtrend. As ever, as I say, when things go vertical, I get nervous. This is the opposite of vertical. So we're in that zone where I expect it to find some support. If it does close below the uptrend, the whole fundamental outlook changes. And just think about what happened last time Saudi didn't play nice, as I mentioned in the introduction. So I'm less bearish than I was, but we'll have to wait and see where the fundamentals line up for that. Brent is a similar story. That's a weekly there. You can draw your trend lines. You've got two broken. Have a look at it on the dailies, and you can see the same sort of thing. It's basically back full round trip to where we talked about. Remember, we talked about 74, then 70. We talked about 64, then 60. We're essentially there. Mission accomplished. It's normally my style to step back and say, okay, where's the next move? And last but not least, Bitcoin, if I can see it, which hasn't really done anything. It's still becalmed. Volatility's washed out because there's so much more fun in other markets. So that's it. Have a great weekend, folks. I'm back home late tomorrow night from Darwin, flying on the 1:30 flight. So have a good one, and I'll be back. I'll be back Monday, and we'll talk about the big setups. This could be a really interesting close of the week with UK GDP, RBA statement of monetary policy, and also Chinese PPI. So it's a time to continue to be cautious, and those big levels in stocks. So have a great one. I'll be back Monday. Bye for now.